Good morning. This is Ron Brown again. I am recording this video because I wanted to explain what's going to happen with the webinars. I wasn't planning on doing the webinar quite this soon, but I'm going to begin on Monday. I know that's rushed for some people, but everything is going to be recorded, of course, and you will have access to these videos for as long as you want them. In fact, I post the videos on my server and you can download them so you will have them on your own computer. Now, the reason I'm moving the webinar up is, as many of you know, I was diagnosed with multiple myeloma a few months ago. I went in for a routine physical, and I've been on chemo since then, and chemo tablets and chemo shots, and the doctor feels that I've made enough progress that he has taken me off the medication, and I have an appointment in Omaha to potentially qualify for a stem cell replacement. So I'm going to be out of commission for 3 weeks to a month if that occurs, and I've had a lot of requests to go ahead and do a webinar, especially from those who have taken the webinar before. So I am going to begin on Monday, the 13th of February, and I'm going to do 3 sessions a week, hopefully Monday, Wednesday, and Friday. And those sessions will begin 15 minutes before the market closes, and they'll run an hour and 15 minutes to an hour and a half. And I just want to get it out of the way because otherwise I may not be able to do a webinar series for a couple of months, and it may be longer than that. So I'm kind of stepping this up and rushing it a little bit. I'm prepared to do it. That's not the issue. It may be a little intensive for some people, but the videos will always be there. So let me talk about what I plan to do. First of all, we're going to talk about risk control, and that is the place where every trader should begin. How much money are you willing to risk? And you have to base the dollar amount that you're going to risk against the position size, and all this is going to be calculated for you in that spreadsheet that I showed in yesterday's video. What is risk-based trading? It's finding opportunities in low-risk setups. Stop levels are not extended from the entry point. In other words, we're looking for entry points where a stock has pulled back. I like to see stocks that are in strong trends, that are resting, and then they're purchased as they break out from those areas. Less risk means a stock or ETF does not have to move as far to maximize the reward. The goal in taking these trades is 2.5 to 1 or better reward to risk. Preferably, we'd like to get higher than that, but anytime you get up in that area with a minimal amount of risk, that's not bad, especially if it's a short-term trade. There are 3 types of risk. The setup or initial risk is what I'm talking about up here. The intrinsic risk or support and resistance based upon daily, weekly, and monthly charts, primarily daily and weekly, and also exponential moving averages and trend lines. The contextual risk is where the entry setup evolves in terms of the trend, significant highs and lows, and or broad market correlation. So we're currently in a bull market. Everybody knows that right now. So you have to take the contextual risk into account. If the market suddenly turns, that of course increases the contextual risk, or the group, or the sector. Some of the significant breakout points, or significant highs and lows, I should say, are 52-week and monthly highs and lows. We have filters in HGSI for those. We can reduce our contextual risk by entering only in trades in confirmed trends. Stocks that are in a trend have a tendency to keep going up. Just look at stocks like NVIDIA and many other stocks. That's the one that comes to mind right now. These are setting up, these are trades that have set up during contraction after expansion, and the assumption is that the trend will continue. Now let me just bring up HGSI here, and let's take a quick look at NVIDIA. And I'll bring it up, and this is the chart, swing high-low trigger chart. So every one of these green areas are areas that I am looking for where a buy stop can be placed above the prior day's high. And in this instance, the entry point would have been right there. With this green bar right here, the entry point actually would have been above this area, or on that gap up it could have been right above here. Now your stop is going to be very close down here on this in this particular stock. Other things I look for, I shouldn't say those who have taken the webinars before, we look for groups that are moving up. Notice that this pulled back as the group pulled back, and then the group started up again. Also want the VPOC, or the volume point of control, 10-day to be positive. That's a green area down here. And we want the move to be confirmed by volume. And you can see several pocket pivot points here. Now somebody asked me the other day why this volume bar here would be red, because when you use volume bars with candlestick charts, the volume represents the open versus the close on a candle. That is why this is a pocket pivot with a red bar. The stock moved up on heavier volume, but it gapped open and then closed lower. So consequently, you get a red bar. Now you can change that if you don't like that. You can change it to, I'll just show you right here while I'm talking about it. You can change it from open to close, to last close to current close. The stock did move up, and now notice that it is a green bar. But I just standardize on open to close for my volume bars. I can look and see that it moved up higher, and but this warns me that the selling, or the close, was lower than the open. Anyway, I didn't want to get waylaid by that, but each time there is a green bar generated, it means it's pulled back from a short-term high, and the buy point would be above the prior day's candle. As a rule, sometimes you have to use your own judgment, but that will be determined by your position sizing and so on. Anyway, let's get back to this. I also use moving average trends for different purposes. 3 and 6 day exponential moving averages are considered micro trends. 6 and 18 are short-term trends. 50, 100, 200 day exponential moving averages are long-term trends. And the fan formation with an 1850, 100, and 200 day stacked indicates a strong trend. Now, volume price with analysis with risk-based trading, daily or weekly. You can do this daily, or you can do it weekly if you're a weekender, where you do all your work on the weekends, I should say. Every day I begin by generating the top 50 group inclusion report. Then I move on to the top-down approach in the warehouse, ranking, and chart modules. I look at the broad market indices, then the narrower markets, and then I look at the HGSI indexes in the broad market indices folder and use the top-down index charts, which are included in the files. Then look at the sectors, the industry groups, certain smart groups, draw conclusions on where the strength and weakness is, and as I go through these steps, I often add stocks to my watch list. Now, incorporating Wyckoff principles with risk-based trading and VPA. Broad market analysis, sector rotation, group acceleration, determine where the money is flowing, look for the relative strength leaders, but look for them as they're pulling back from going from expansion to contraction, or if you catch them coming off of contraction on the first day, that's fine. VPA signals built into HGSI are going to help you a lot. Prospecting and building a watch list. We look for low-risk entries with the impulse reaction warehouse view and using charts and VPA flags. I pay particular attention to stocks whose group is moving up. Look for VPA flags in the area and for fan support. Check the earnings date. Look at both daily and weekly charts. I have a new screen in there to screen for counter trend stock setups. What that means is that the stocks are in the fan formation with the 18 stacked above the 50, which is above the 100 and the 200-day exponential moving averages. And the counter trend move is a move. The stock prices move down below the 3 and the 6-day exponential moving averages. It's crossed below, and that could lead to some very low risk setups. I add favorable charts or stocks that look good to the watch list. Stocks moving with their group, positive 1010, volume point of control, EMA support, etc. Volume should confirm price. Look at pocket pivots, VPOC, force indexes, and so on. Both the warehouse and ranking modules can be used to determine relative strength. Also, I have a couple of charts in there to determine relative strength. After adding stocks to a watch list, I choose the most favorable setups, enter a buy stop or stop limit orders. Try to do this before the market opens. If I do it before the market opens, I will use a stop limit order because I don't want to buy stocks that have gapped up and then drift down immediately. If an option spread trade is more appropriate, consider using that instead of buying the stops outright. We're picking direction with this methodology. If you feel that a stock is going to move up, maybe you want to consider using a debit spread or a bull put spread or something like that. That's kind of beyond the webinar series, but we may spend a little bit of time on that. I'm going to talk about stop placement and position sizing. You can move your stops further out, but when you do that, it's harder to get the amount of reward you want out of the position. Now, if you're taking a longer term trade, it's if you're anticipating a longer term trade, I should say, maybe it's better to move your stop out a little bit, but your position size is always going to be based upon a percentage of your equity. After a fill, enter stops and target alerts into your trading platform. I use Thinkorswim. I do that automatically. If I get a fill, I'll go ahead and put my first target in, put an alert in, and then I'm alerted if that is reached or if I'm stopped out. Here's what you'll receive with this webinar series. Risk control and position sizing spreadsheets, flowcharts of the processes I use. Now I have some flowcharts. I will build them as I go along as we talk about these things. Wyckoff's original course, it's a PDF. I've gone in and bookmarked all the chapters. You may find that an interesting read. A lot of it's still relevant today. I have an old PDF that I did for a seminar, a live seminar several years ago. I called it Trading the Wyckoff Method with HGSI, and that's a PDF. A PDF that shows Wyckoff logic. My latest add-on file, which also goes to the Insider Club subscribers, you get an update of the groups that I track. I do that, release that every weekend. If I'm unable to while I'm in the hospital, Paul Reicke's going to help me out with that. Any views, filters, and combos or charts added during the webinar sessions you'll get. Video recordings of all sessions, which can be downloaded. This is a real benefit here. Access to the Skype discussion room for webinar attendees. We have a Skype room, and if you take this, you're welcome to join. There's a lot of good ideas in there for trades. You may not want to take the trades, and people just essentially say what they're considering buying, and it's your responsibility if you want to take the trades or not, but it will give you some ideas of what people are looking for. And there are several active users in there, and there are also a lot of people who have joined that are not very active. Any trades I take or are considering will be shared and during the webinar, and I may send emails out too on the non-webinar days. During the last two webinars, I made around 100%, a little better than that on one of them, I believe, based on the risk taken, not the capital. There's a difference there, but I think it's fair to base it on the risk taken, just to show that this process does work. Most importantly, you'll learn to trade the right side of the chart. One of my pet peeves is looking at all this instruction that's handed out over the web, and they're looking at a chart that's 2 or 3 years old, telling you that if you'd have done this and this and this, you would have made a fortune. Well, we all know that. We have to work from the right side of the chart. The first session I'm going to record and share it on YouTube. That's for people who may want to are considering doing the webinar but want to see what it's about. I'm not going to let you in to the webinar live, but I will post the recording immediately after, well, as soon as I can, after Monday's session, so you can see what my teaching method is and what this is all about. And if you want to attend, I suggest that you download the Join Me app, and you can download the Join Me app at this link. You can download this PDF by just typing this in your browser, www.hgsinvestor.com/Feb webinar, and you can register at www.hgsinvestor.com. Now I just have a basic sheet up here, and if you download this PDF, or you can go directly here, and this is linked to PayPal. Now you can also pay the full price through the High Growth Stock Investor website, but since I have different pricing, I thought this would be easier. You can see that I'm not a web designer, and that's a picture of me. It's probably 10 years old now. I look a little older, but still look about the same. And if you're an Insider Club subscriber, you can register here for $4.95, for a non-subscriber $5.95, and if you're a previous webinar attendee, you only have to pay $100, and this is something that I will continue in the future. I think it's only fair to allow people to have my latest thoughts and work, and if they're willing to pay $100, that's a minimal fee for the amount of time and effort I put into this. If you want to email me, you can click on this link. It'll open your mail program. Anyway, let's say that you've taken a previous course. You just click on Add to Cart. It'll go directly to PayPal. If you change your mind, you can remove it. You can use the PayPal checkout, or if you don't have a PayPal account, click on the lower button, and this will take you to the page where you fill out your credit card information. If you don't feel comfortable doing this, send me an email, and you can mail me a check. I am very easy to get along with. So anyway, consider this if you're interested. We have the best piece of software in the world for this type of prospecting. Yes, it can be a little bit intimidating, but I have built all the views, filters, and combos for you. And if there are more that are needed that come up during the discussion, I will certainly provide those, and you will see the benefits of using HGSI as your software program. Thank you for listening, and if you want, remember, if you want this PDF, just go to this link right here and click on it and it will download. I already have it downloaded, but I'm going to get another copy right here. And make sure that you save it. I am using Chrome, and if you click on this button over here, it will download it. If you use Windows Explorer, I believe you have to right mouse click and use the Save As feature. Thank you for listening. And remember, I'm going to begin Monday, and you need to have the Join Me app downloaded. You can use Join Me through a browser, but it works better if you get the app. And also I use the app for support, so I can log on to other people's computers if they're having a problem. Once again, thank you for listening, and I hope to see you online.